Welcome to Smart Stock Watch. Today is August 1st, 2025, and we're diving into Howmet Aerospace's second quarter 2025 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, Howmet Aerospace has reported some impressive numbers this quarter. Can you give us a brief overview of the company and the highlights from this report?
Absolutely. Howmet Aerospace, a leader in engineered solutions for the aerospace and transportation industries, has reported record revenue of $2.05 billion for Q2 2025, marking a 9% increase year over year. The company also achieved a record profit with a net income of $407 million, or $1 per share, and strong cash flow from operations. These results were driven by significant growth in the commercial and defense aerospace markets.
Revenue and profitability overview. Let's start with the top line. Howmet Aerospace reported a net revenue of $2.05 billion for the second quarter of 2025, which is a 9% increase compared to last year. John, what factors contributed to this growth?
The growth was primarily driven by an 8% increase in the commercial aerospace market and a 21% surge in the defense aerospace market. Additionally, the industrial and other markets grew by 17%, although there was a slight decline in the commercial transportation market by 4%. This diverse growth across sectors helped Howmet achieve record revenue.
And what about profitability? How did the company perform in terms of net income and operating margins?
Howmet reported a net income of $407 million, up $66 million in the same quarter last year, with earnings per share rising to $1 from 65. The operating income margin also improved significantly, reaching 25.4%, up 420 basis points year over year. This indicates strong operational efficiency and cost management.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 87 for Howmet Aerospace, based on a survey of 7 analysts. How did the actual results compare?
Howmet Aerospace exceeded expectations with an adjusted EPS of 91 cents, which is a 36% increase year over year. This beat the analyst forecast of 87 cents, showcasing the company's strong performance and ability to surpass market expectations.
What does this mean for investors and the market sentiment towards Howmet?
Beating the EPS forecast is a positive signal for investors, indicating that Howmet is not only meeting but exceeding market expectations. This can boost investor confidence and potentially lead to a positive market reaction, as it reflects the company's robust financial health and strategic execution.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Howmet reported an adjusted EBITDA of $589 million, up 22% year over year. What were the key drivers behind this improvement?
The increase in adjusted EBITDA was driven by strong growth in the commercial aerospace, defense aerospace, and industrial markets. Additionally, Howmet's focus on cost management and operational efficiencies contributed to a 300 basis point improvement in the adjusted EBITDA margin, which now stands at 28.7%.
How is Howmet positioning itself for future growth, and what are their strategic priorities?
Howmet is investing in growth backed by customer contracts, with capital expenditures up 60% year over year. They are also returning cash to shareholders through share repurchases, totaling $175 million in Q2, and have reduced debt by $76 million. The company has raised its full-year guidance on all metrics, reflecting confidence in continued growth, particularly in the aerospace markets.
CEO's perspective and strategic initiatives. John, what insights did Howmet's CEO, John Plant, share regarding the company's performance and strategic direction?
CEO John Plant highlighted that Howmet achieved a quarterly record in revenue, surpassing the $2 billion mark. He emphasized the company's strong cash generation, which supported $175 million in share repurchases and a 20% increase in the common stock dividend to 12 cents per share. Looking ahead, Howmet is focused on growth in the commercial aerospace market, driven by healthy passenger traffic and high OEM backlogs.
How does the CEO view the current market conditions and Howmet's position within it?
Mr. Plant is optimistic about the continued growth in the aerospace markets, particularly with the demand for new, fuel-efficient aircraft and engine spares. He also noted the strength in the defense aerospace market and the demand for industrial gas turbines. Overall, the outlook is positive, and Howmet is well-positioned to capitalize on these opportunities.
Key takeaways. In summary, Howmet Aerospace has delivered a strong performance in the second quarter of 2025 with record revenue and profitability. The company has exceeded EPS expectations and demonstrated robust cash flow generation. John, any final thoughts on Howmet as an investment prospect?
Howmet Aerospace is showing strong operational performance and strategic execution, making it an attractive investment prospect. The company's focus on growth in the aerospace markets, coupled with its shareholder-friendly actions like dividend increases and share repurchases, positions it well for future success.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Howmet Aerospace's performance in the comments below. Until next time.